Hey, what's up guys, John here. 7-Eleven has just announced they're closing nearly 450 stores.
7-Eleven closing 444 underperforming stores across North America.
Blames the decline in foot traffic and rising prices for the cutbacks.
Just a couple days ago, Walgreens announced they're going to be closing 1,200 stores.
Walgreens announced it is closing about 1,200 stores, including 500 over the next year. The drugstore chain is struggling financially.
Rite Aid filed for bankruptcy. Red Lobster, all these big chains everyone knows filed for bankruptcy.
Companies are filing for bankruptcy now at the fastest rate since 2020.
Bed Bath & Beyond filed this year, Party City filed, Vice Media, Instant Pot, and Pyrex. The list really goes on.
But the big change that's going to be happening throughout America is going to be this collaboration with once known competitors, finding ways in which they can work together to survive. It's very interesting. If you look at Bed Bath & Beyond and the Container Store, they're now doing a collaboration to where they can both try to make it. The Container Store is showing 3 years of essential losses, and now they're saying they don't even want to show their revenues. And Bed Bath & Beyond filed for bankruptcy, and they're saying, what can we do together to try to, make it through the end of this storm? It's very fascinating because if you look at Mr. Beast, what he's doing, these collaborations with other restaurants, I think this is the future. I think we're going to see so much change unfolding in the US economy over the next year or two that, I'm betting on it so much that I'm even relocating my entire family. And right now I'm in an Airbnb about 2,000 miles from my home, looking at an opportunity because I think the next 12, 24, 36 months, if you are paying attention and you are investing correctly and you're doing the right things, you're going to be able to make a lot of money. I'm talking generational wealth. And that's what I'm going to break down actually on this channel in the future if this deal works out. And I'm going to show you guys what I'm doing because I think that there's a lot to learn right now with these big box retailers and these big chains and what they're doing to pivot and shift and what we can all do in our own ways to make a lot of money. Please hit the like button. When you do, YouTube will share the content, educate more people about what's happening with not just consumers, but what's happening with brands and what's happening with the US economy. For example, 7-Eleven, what they said here is that they essentially are saying that consumer sales with cigarettes have fallen 26% since 2019. And they're saying that smokers either quit or they change their nicotine products, vapes and things like that. But in electronic cigarettes, what's very interesting though, is the shift that consumers are going through right now. Ever since 2020, people have been looking at health differently. They've been looking at what they eat. They've been looking at, everything about, is this good for me or is this bad for me? And this is changing entire industries. 7-Eleven, for example, they're saying that their entire model has been changing because of consumer habits. Look at this. October 11th call, 7-Eleven president Joe DePinto announced this company will shutter 444 stores. The convenience chain is owned by the Japanese company 7 & I Holdings. In an email statement issued to Today.com, a spokesperson for 7-Eleven confirmed the closures. Aligned with a long-term growth strategy, we continuously review and optimize our portfolio to deliver convenience where, when, and how customers need it, the statement reads. As part of this, we made the decision to optimize a number of our non-core assets that do not fit our growth strategy at a time we continue to open stores in areas where customers are looking for more convenience. The first half of this year has been challenging. It's been driven by the macroeconomic conditions, evolving industry trends. In addition to inflation, DePinto noted that 7-Eleven was deeply impacted by a significant drop in cigarette sales. Now 7-Eleven is adapting to meet new consumer preferences. With consumers seeking fresh, higher quality food and beverages, he noted, the company aims to pivot its approach to what it provides on its shelves and self-service areas. Food recently overtook cigarettes as the largest category at 7-Eleven Inc. The company has been investing heavily in its food and beverage modernization program as it capitalizes on the shift. Now, I think they're going to be moving heavily in AI, and they're going to be looking for ways in which they can reduce their expenses to try to weather this storm. I think they're going to be changing a lot about their entire model over the coming couple of years. It's not just them. All these major corporations will be doing it. For example, Bed Bath & Beyond is returning to brick and mortar stores at a rival. Bed Bath & Beyond is coming back to physical stores near you after going out of business last year, but this time it's taking up space at a rival. Beyond Inc., which bought the defunct retailer out of bankruptcy, is investing $40 million in the Container Store and giving the Home Goods, a former competitor, a much needed lifeline as it struggles with its own financial issues. as part of the investment. Bed Bath & Beyond branded kitchen, bath and bedroom products will soon be sold at the Container Store's 102 locations. The partnership aims to improve customer experience utilizing both the iconic Bed Bath & Beyond and the Container Store names, the press said, which are two of the most recognized names in shopping that have fallen into financial mess in recent years. In May, the Container Store a strategic review of its business as it struggles with slumping sales and hasn't posted a profit in 3 years. A few months later, the chain said it would stop offering financial guidance as it research for help. So you have these major chains doing these collabs. It's very fascinating. Then you have Mr. Beast. When he did this partnership, essentially what he was doing is a virtual dining concepts. He would connect three necessary pieces: a virtual kitchen, celebrities or influencers, a menu, and local operators. So he would basically get a piece of everything without absorbing any of the cost to actually open up the restaurant. It was a genius move.
Imagine being seriously injured and missing out on millions in compensation just because you didn't know where to turn. Many law firms settle for low-ball offers, leaving victims with far less than they deserve. It's frustrating, unfair, and sometimes they charge you before they even win. That's where Morgan & Morgan comes in.
America's largest injury law firm fights to get the clients the compensation they deserve.
And the best part, you pay nothing unless they win. They've won $12 million in Florida, 34 times more than the insurance offer, and $26 million in Philadelphia, 40 times more than the insurance offer. Prior results do not guarantee a similar outcome. Features: no upfront fees unless you win. Over 1,000 attorneys and a dedicated legal team to fight for you. They handle everything for you, and it's incredibly easy to start your claim. Your injury could be worth millions.
You can visit the link in the description box below this video to start your claim today. Right? What do you think is going to happen with a lot of these restaurants that are suffering? They're going to be trying to find ways in which they can survive. All of these companies, all these brick and mortar stores are going to be doing the same thing. But then it makes me wonder, when you look at a shopping center, you might have one anchor retailer. It might have been, many years ago, it might have been a Blockbuster Video, or now it might be a Whole Foods. And these retailers, they'll generally get slightly discounted rent because it makes it a lot easier to fill the other spaces at a higher rent because everyone wants that foot traffic and everyone wants to be associated with being in that shopping center. What does this mean when you have a Bed Bath & Beyond or one of these major retailers that is closing up that location? It means a major loss for the investor that bought that property. And most likely they probably bought it in 2021 or they took out debt in 2021, 2022. And when they lose that anchor retailer and then those other smaller stores no longer want to pay that rent at that inflated rate, what's going to happen? There's going to be a lot more available retail and these rents are going to be softening. You're going to see a lot of stress, I think, unfolding in the next year or two inside of these retail strip centers. And a lot of that stress is held by regional banks. They're holding 70% of all commercial real estate debt right now. So you start to look at all these changes. It's going to be major corporations. It's going to be retail. But you look at it also from the perspective of consumers. If you're a business owner right now, a lot of this attention is flowing online. There's so much opportunity to open up online brands and businesses and find ways to monetize this. What industries will grow in the future? So, healthcare and insurance. The healthcare market in India is expected to grow from USD 180 billion to in fiscal year 2023 to USD 320 billion 2028. Right? This is just India. All these countries are changing. Cannabis, for example, they're saying that in 2020, it was 5.7 billion, and by 2027, it's going to be 23.3 billion. That industry, for example, just a couple of years ago, was an industry a lot of companies, a lot of really wealthy people wanted to stay away from. Had a kind of a backroom type of vibe to it. Well, this is coming right out in the open now. This is going to be an industry I think is going to become probably more accepted than cigarettes in the future. You have clean energy, AI, finance, banking, cybersecurity, healthcare, insurance. All these industries are going to be growing. And a lot of the brick and mortar stores, if they don't adapt, they're going to be dying. So I think we're walking into a scenario the next, I would say, couple of years, next 2-3 years, where if you're pivoting correctly right now, you're going to make an absolute fortune. An absolute fortune. I think there's going to be a lot of opportunity to acquire retail, a lot of opportunity to acquire these key trophy assets for pennies on the dollar, because how many people in the next 2 years, 3 years are going to want to lease retail square footage? Not many, right? It's going to be a race to the bottom. And these investors were buying these deals at a 5% cap rate, 4% cap rate, sometimes even less depending on the area. And so it was based on these inflated rents. As these rents start to soften and insurance skyrockets, I'm telling you, insurance is going to skyrocket the next year or two. Insurance and taxes are continuing to be elevated. Utility bills continuing to go up. People, shopping in retail less and less and less. It's going to push these prices in a really, really, really big way south. And you might be able to acquire some really, really good deals and, and find ways in which you can, profit off of them based on this new economy. There's going to be pop-up shops. There's going to be all these new ways in which consumers are going to be spending money. And it's going to be very different than, how they were spending it 5 years ago. So I think what we're going to witness here, when you hear about Walgreens closing up stores, 1,200 stores, 7-Eleven closing up 450 or 444 stores, you hear about Rite Aid closing up stores, all these industries are going to be closing and adapting. It's going to show us very, very clearly that we're walking into a major shift. It's very fascinating as well. If you look at Amazon, you look at Walmart, they're investing heavily in drone deliveries, and they're going to be looking to deliver items directly via drone. And they're going to get things that, to consumers so fast. I'm talking probably within the hour, within 2 hours in the next couple of years, that it's going to just push more and more and more people away from retail. It's going to push more and more people away from this. Now, some people would say, well, then why would you buy retail? Well, everything makes sense at the right price, right? And so you start to look at this, significant headwinds coming to a lot of different industries and significant opportunities coming to new industries that are going to be evolving right now. It's pretty crazy how fast the world's changing. I would have never imagined that we'd be seeing thousands and thousands of stores like 7-Eleven, Walgreens, CVS, Rite Aid, all closing up at the same exact time. I mean, these are anchor corporations in America that have been around for many, many, many decades, that have supplied immense value. And now people are either stealing from them, or inflation's eroding in their margins, or they're just not shopping there. So much so that they just want to close up. They need to close up. What do you think about this entire situation? Where do you see the big opportunities unfolding in the U.S. economy? There's going to be a lot of money flowing to new markets and new opportunities. Where do you see that? Please hit the like button. When you do, YouTube will share the content, educate more people about what's going on in the U.S. economy. And for more information on today's sponsor, you can click the link in the description just below this video. Catch you next video.